Hello, and welcome to Morning Market Analysis with me, Malachi Kelly, professional trader for over 10 years now. So the crypto market has started to see a pullback. If we look at the overall market trends, cryptocurrencies, you'll see that Bitcoin and Dash are seeing positive gains today. We've had a new cryptocurrency, well, not new cryptocurrency, so Cardano, ZRX, and a few other coins have been announced that they're being added to Coinbase. So we should see an improvement in those particular cryptocurrencies just because they're being added to Coinbase. The speculation in terms of the amount of people that will be able to buy those coins that couldn't buy before. European series. We're coming to apply now. I've already applied. Okay. So I was just thinking those that know soon leverage trading will be a thing of the past. You won't be able to use as much leverage as we were using before unless you can prove that you are a professional trader and you've been trading for a long time. It's going to make this trading game a little bit harder, and obviously the people that have been in it for a while will have a slight advantage over the people that haven't been trading before. But that's another lesson altogether. Let's just look at this graph and see what's going on. So if we take this onto a one-day chart and have a look at a holistic view on where we are. So over since June, we've seen the price steadily go downwards. Not seeing any return in terms of price increase. So we did have an uptrend at the beginning of or middle of May, June, July. We haven't seen price really go past here, really. So past below 6,000, price hasn't really stayed below 6,000 for any long period of time. Maybe about one day at the most. Below this price in the last 60 days. We're now seeing price attack the highs at around 6,684. A break of this level will open up 7,596, which would be nice to see cryptos go back up to these levels. It would definitely make my position or my Ripple position turn positive again if we see levels in Bitcoin at 7,596. And to be honest, I think it's about time that the crypto market turned. I mean, I've been talking a while now about this big investment that we're supposed to be getting from investment banks. That may have started to happen already with the low of 5,875. As you can see, it was bought up quite significantly on that day, and then price has then subsequently gone higher. A correction has happened, so some profit has been taken, and then it's been bought up again. So we'll see how the crypto market continues to flourish as time goes on. But at the moment, we're still waiting for a new high of around $9,000, $10,000 per Bitcoin before we believe this market is now going up. So let's jump into our Forex market, and first we'll look at the news to see what may impact the market today. So we go to our trusty site, forexfactory.com. That's forexfactory.com. As you can see, it's 7:11 a.m. in the morning. That's why I'm still yawning. We've had monetary policy meeting minutes. Carney's speaking at 9 o'clock today. So, and then we've got the average earnings index at 9:30. So we could expect some volatility around between 9 and 10 o'clock. So we don't want to really be in a trade between 9 and 10. 10:30 will be a better time to be in the trade. And then prior to 10:30. So let's go and look at the chart and see if we can get a directional bias in the dollar market. So we've got the dollar open. Make that be bigger. We'll change this to 30 minutes. Okay, let's go. So we've seen this dollar market been quite choppy recently. We've seen price go up to our top of the range, to 94.80, and we've also seen it come down to the bottom of our range. We're currently now at, in essence, the bottom of our range, below DP. Sentiment is negative. So at the moment, we're not sure where price is going to go. Is it going to go up or is it going to go down? Now, based on where we currently are, I'm more inclined to say it's going to go down. We're below DP and the MAs have crossed. So with that said, I would expect more downside pressure. But it's very difficult at this point in time. It's as easy for the dollar to go up from here and break through these levels as it is to continue going down. There's more chance of it going down in my view, but we don't know. So with that said, I wouldn't be jumping into any trades today anytime soon because I'm not sure of the bias. We have a weak bias and we're saying that the US dollar is continuing to go down. We need to go down. I mean, what do we need to make us more confident about our bias? Well, a break of this level would really make us confident of this bias. So anything below 93.95, actually let's go 93.90. Anything to 93.90, we're potentially looking for a break and then a pullback into 94 area before more subsequent downside. But let's put in an alert for 93.90. Okay. So if we notice the alert goes off at some time today, I need to go and look at my charts and see what's going on. But for now, we're going to go through the rest of the dollar pairs. So we'll first look at Euro USD. So we're seeing the same as the dollar market but in reverse. Now it looks like we're breaking up as we speak, but stochastics looks overbought. So we're more likely to see a return back down to the lows down here. But as I said, I wouldn't want to jump into a trade right now because we could easily see this market continue to go up. We've seen this major cross happen, no pullback. We're above DP. So what we want to see is that pullback. Let's remove this Fibonacci, and we'll look at the new trend from low to high. But you could say if this doesn't break here, you could see this as some sort of double top. But we'll leave that aside for now, and let's talk about our pullback. So if price moves down to the 50% fib, it will be below our average lines Thus, we can't place a trade here because it will be going against our principles. We'll be trading into both MAs and DP, which wouldn't be good. So, chart dismissed. So, cable. How is cable positioned for a trade today? So we are also hovering on DP. Let's remove this last Fibonacci range and a new one. Okay. Low to high. There we go. Okay, so our Fibonacci ranges would go below DP, go below both MAs. So again, this wouldn't be an opportune time to play straight. Chart dismissed. I mean, we're going to probably see this same pattern arise across all of our dollar markets that we're not trading at the right time. This Aussie dollar is not looking good at all. I mean, we're seeing the chart not respect its averages, breaking through them, and then breaking back to them again. This chart is in essence very choppy and very hard to place a trade in this current market. I mean, what we could say is that we are seeing a high here, and that price is potentially going to retreat. Going to retreat from here and potentially make a new low. But we need to see price do that before we get involved in this market. Stochastics say it's going to. But we would need to really break here. So now, what I was thinking is potentially a break of this level would be quite significant. Let's go back. And you see, look, here's the highs here, here, and a lot of congestion here. So a break of this level should bring out some further selling. But it's got to move. It's got to move. What is it? 74, 34. It's got to move 30 points before we even think about getting into this trade. So if it's got to move 30 points and then it's got to move another 60 points just to get 2%, we're looking at 73.40, which is about, oh, got to go further, which is about here. So for us to get 2% from this trade, it's got to come all the way down to S2, which is possible from a break of here. But it's not the best trade in the world. Now the beauty about putting on this trade is that we're only going to get triggered on this trade if we see a break of our average lines and our stop will be above the previous high. The great thing about this trade is that if the price does go the other way, we will never get triggered. So this is kind of a safe trade to put on today. So I'm going to go ahead and put this on a tentative trade at around 73.90, yes. So we're going to sell, going to place an order around 73.94.45. Our stop, we just do it at amount. As long as it's above 74.34, we're good. 74.08. Oh, 73.90 as well. 74.08 doesn't really give us. So as you can see, our 1% range is a little bit too much. We need to go to 74.40 in essence, but we can't go that high. So it may increase. I still don't think we'll be able to go any higher. 74.40. Nice, just can't do it. So in essence, we're not putting this trade because the margin is too much. The risk reward is not great. We don't know if it's going to move in our direction. Even putting on a tentative trade won't work. So chart dismissed. Let's look at our yen pairs. Euro JPY. So seeing this market go up and up and up and up without any pullback. We're well away from DP. Our market is quite stretched, so we need a fresh formation before we get involved in this chart. Chart dismissed. GBP JPY. I mean, we're seeing a similar pattern across the JP market. It's in essence losing against every currency. We would like to see some sort of pullback before we get in. So we'd like to see potentially the market come down before getting involved. I mean, it's not a fantastic day today. We're not seeing any potential trades. And the great thing about trading is that you only need 10 to 12 trades a month. You don't have to trade every day. You don't have to put on. You don't have to be focusing on putting on trades every day. You want to look for that right setup, that right chart pattern that you know and has historically proven to you that you can profit from this particular chart pattern, and only putting on those trades when they arise. Now, generally there is between 10 to 12 of those on a monthly basis, sometimes more, sometimes less, but on average that's how many there that you can spot of those types of trades that are, the risk reward is correct, the positioning of the MAs are correct, and everything is in the right place, and you go on and win that trade. Now, what's been happening is that because I've been doing this analysis on a daily basis, I've kind of been forcing myself to put trades on that are not really there. And subsequently, I've been seeing some losses, not huge losses, but just a few initial losses. And I've been going against my principles and going against the way I trade, just so that I can put some content in the videos in the morning. So I'm going to stop doing that. If there is no trade, there literally is no trade. I'm not going to try and force it because that's not helping anyone. I need to trade how I trade, and I'm going to continue to trade the way that makes me long-term profits. Overall, my account is healthy. I need the crypto market to increase a bit, but other than that, we're doing fine. Now, if you're looking at or haven't even looked at the 30-day challenge in the Hidden Wealth Blueprint, then I suggest that you click the link below this video, as I've got so much that I can teach you in regards to increasing and growing your wealth other than just trading. Although trading is one of the 7 columns of wealth, there are 6 more that you can find out about if you click on the link to the Hidden Wealth Blueprint and find out all about these 7 columns of wealth. I've been Malachi Kelly. You've been awesome. Happy trading.